V Gold Trust and gold buyers will release the gold you have pledged and buy it at today's market price.
Hi to everyone, this is your pawn. Many people are losing money by trading in the stock market without knowledge. That's why I want to learn from the beginning in iDreams. If we learn from the beginning, we will have a chance to make profits in the stock market due to proper guidance. If we do it without the same knowledge, we will automatically lose 100%. If we want to be successful in any field, be it your field or the stock market, if we do not know about it clearly, we will fail 100%. Also, candles play a key role in the stock market. Whether you are trading in the Indian market, Forex, crypto, or any other segment like Bitcoin, Forex, or any other market, the most important thing that plays a key role is candlesticks. In this chart pattern, you will clearly understand where this candle opens and closes, how many buyers there are, how many sellers there are, in this PDF. Watch the video till the end, okay? Let's start with understanding candles. Here, take a look, how many colors of candles do we have in the market? Depending on what we set, green, red, okay? Let's talk about where that green opens and closes, where the red opens and closes. First, let's look at the market here in 4 types, okay? That means consider this one, this is 2, this is 3, this is 4, okay? So, the market is always a green candle that opens below. That means this candle opens here, okay? Suppose I showed you a chart like this directly, here you would be confused where it opens and where it closes, 100%. Apart from that, if you look at the starting candle like this, where did it open? Are there more buyers or sellers? What many people think is that if it is red, they think there are sellers, otherwise if it is green, they think there are buyers. No, pressure is different. Color is not the real matter in the market. So, normally we use color only to identify, okay? So, let's go to the first one. So, once you get to the first slab, look, here the market is now open. What time frame is that candle? Suppose you have set 1 minute time frame, 3 minute time frame, 30 minutes, 1 hour, 1 day in the trading view. A candle is created according to the moment the market moved throughout that day. If it is in the same 30 minutes, then in a 30-minute period, as many candles as we draw, there is only one candle. That is, the point of view of how the market fluctuates in the 30-minute period, how far the open went, how far it came down, is the candle. So if you look at it this way, what we say is important. Look, now the green candle has opened here, where it went after starting, everyone thinks it has gone here. But that's not how it is. After the open, it came down first, then it came up. That is, it was a starting red candle. After that the market rose up and touched the high. After touching the high, slowly again the sellers and buyers got activated and the sellers brought it back from here and closed here. That is, the open was here, then it came up here, then it went up, then it came down. This is what happens with a green candle. A green candle always opens below. Okay? So let's take a look at the next red candle. Where did its open come from? It opened above. If you look here, it opened below. If you look here, it opened above. After the market opened, it went up and then it created a green candle. That is, it went up like this. We say it is red after the close, but how is it in the starting running? It went here, then it slowly came down again, topped here, and again dominated all the sellers and again those buyers took it up. That is, it's all about money pressure, not people pressure. Now imagine that there are 100 people on that side and 100 people on this side, holding each other. It's not like that. Whoever has more strength goes to that side. It's not about people majority, it's all about money majority. Whichever side has more money flow, that side is the market fluctuation, the flow, that's what goes. So, when the starting point came here, the market flow was down, but another big player, mutual funds, who dominated them and put money pressure, could take it up again by flowing more money into it. After that, pressure is created in the market. Go to the next slide. So I already told you that now where it opens and where it closes, you also understand the red candle and the green candle. Now if you look at it like this, you have to tell where it opens. Guess where the green candle opens and now it is also down. So, after that, the market went up and closed here. Now the clans are watching here, right? Now you think, if you fuse the video and don't know whether I got it or not, there are many people who are trading in the market without knowing whether I got it or not. That is the reason why you lose 100%. So, look here. Now if you look like this you should know where the open is, where the close is, where the low is, where the high is. If you don't know here, I told you the slide, open this once, check it again. Okay? After that, the third slide gives us bearish candles, red candles. I have already told you where the red candles open, where they close. So, look there. Now understanding candles, you put in which time frame, in which time frame. Now you should identify which candle will open where. So, if you can't identify it like this, it means that you don't understand candlesticks in the market yet. There is red in the market, where it will open in red. Suppose this candle is, where will this candle open in red? So, most of the people can say here, they can say here, they can say here. But where is it here? Here. Did you see this edge body? Did you see this body? It used to open near this body. First it went up, then it came down and the buyers dominated it again and rejected it here. Look at this candle, they call it a doji, they call it a rejection candle, they call it a direction candle. So after the market came so fast, it went up again, right? When it was going like that, how can we identify it through candlesticks? Is there a rejection candle here? Is there a rejection candle here? Look at this, after it first came here, the buyers dominated it again in the market and went up and closed. That is, after dragging a friend there, the people brought it here again. When it went to the center, the strength was there, but how did they bring the last closing? They brought it to this side again. That is, they were able to pull back those who went there, that is, who has pressure. Here there is buyers' pressure, but what is the color? There is red color. So in this way we know what is the buyer's pressure, what is the seller's pressure. This is where the reversal candles are. I told you now, reversal candles. You also know whether there are more buyers or more sellers. There is a green candle here, but here there are more buyers, there are more sellers, that is, there are more sellers. Because the market has been rejected like this, whenever there is a rejection, there is a wick above, okay. But now the rejection has come from below, so it is below, the wick is brought here and taken back up again. The market has already come here and taken back again, so the wick is below. If there is a wick above, then we can identify that there is interest in taking the market down, and if there is a wick below, then we can identify that there is interest in taking the market up. Okay, let's go to the next slide. You can identify where the reversal candles fall, how they reverse. Look here, our candles are falling below, the rejections fall below. When they fall in the rejection below, the market goes up. Look at the rejection above. Is there a wick above here? So do you see that there is a wick above that? When there is a wick above that, the market has interest in going down. So I think you understand the market now. So in this way, we look at the reversal candle here, look here. So when the resistance falls above here, it falls down, and similarly look here, look here. So you can see that there is a supply zone here in the market. You may think I didn't tell you what a supply zone is, or not. Suppose the market has two or more areas with the same price number of 100. Let's say the same area has a price of 100. This is the same area, this is the price of 100, this is the market top once and came here. So and in the same way, the market will top there again. That means there is a supply. Now there is a land. They say there is more supply, there is more demand for it. That means now there is more demand. Everyone here also looks at the market, near that price. Now there is more demand for it near 10,000. Supply means that they are showing interest in selling in that area. After it reaches 15 locks, after going to that area, here there is 10 locks. After it reaches 15 locks, we are looking to sell that land. So, that is why it is called supply. What is on the upside is called supply. Whatever is under pressure, the area that is being topped and rising more times, is called demand. Okay? So, I think the market understands now. Then look at the doji candles. Doji candles. So, here you have an upside wick, a downside wick, which means that buyers and sellers are equal. The market makes a decision. When a candle like this falls, after falling like this, suppose a green candle falls and breaks its high. Is there a neutral candle and breaks its high, which means that buyers and sellers are equal so far? Buyers have become more active and we can identify that there is more interest in taking the market trend to the upside. So, now you think, who is showing more interest in this candle? Is there market interest to go to the upside, to go to the downside? I said earlier, if there is a wick below, it is always on the upside, and if there is an upside wick, it means that the market is showing interest on the downside. Look, here the wick is higher than the market rejection, so we have the downside. Okay? So, let's go, look at this slide next. Look at this slide, I already told you. Here we have a 15-minute candle. 1 hour means how many 15-minute candles add up to 1 hour. So 4 15 minutes means one candle closes for 15 minutes. One candle closes for 15 minutes. So if 4 15-minute candles close, that's 1 hour candle, right? Now how many minutes are there in 1 hour? 60 minutes, right? So 60 minutes means 61-minute candles, 1 hour candle. How many hours does the market have in a day? It is 6 hours. So 6 hours together is a day candle, okay? So let's look at it like this. Look at this. Now you understand. Where did the market open for the first 15 minutes? It opened here. How did you understand the opening and closing? So, it opened here. What happened to the market after that? The next candle slowly came here. In these overall 4 candles, the opening here, the candle that came lower than all the others came here. Here it is low, so it was drawn low. After that, Where did the high go? What is the momentum that went up in these 4 candles? Where is it? So the high was generated here. After that, the market slowly came here and closed here. So this is the open, this is the low, this is the high, this is the close. So whatever this rejection that came back, it converted under the wicks. Whatever the body is in the middle, the body between the open and the close. Do you see what is between the open and the close here? These lines, these 2 lines, the part between these 2 lines is converted under the body. That is 1 hour time frame. Another one, we can modify it to 1 hour time frame, 15 minutes, that is, some people from the lower level to the higher level say, after 15 minutes closing, we should take an entry in 3 minutes. That is, how do you recognize that? So we analyze in 15 minutes and then modify it to 3 minutes and we can take it under the entry. Okay, after that, I am going to the next trail. I think you understand. So look here, I told you earlier that if you know how to trade in a 1 minute time frame, you will understand. Look now, where did the first candle open? Where did it open? How many 1 minute candles are there in 15 minutes? How many are there? 15. So look, calculate here, you will have 15 candles. Where did the first candle open in 15 candles? Where did it come to the low? Where did it generate the high? Where did it generate the low? Whatever is under the body, whatever goes up and gets rejected again, whatever comes here, under its upside wick, whatever goes down and goes up again, we convert it under the lower wick. Is that all? So I think this is also understood. Then the evening star. What does an evening star mean? Suppose it is generated in the market like this. Look here, this is a 5-minute candle, this is a 5-minute candle, this is a 5-minute candle. If you add 3 5-minute candles, it is a 15-minute candle, right? Okay, so you got 3 candles like this in 5 minutes, that means it will be like this in 15 minutes. Okay, I think I understand. So it opened here, it closed here. We see it like this, right? So there's a rejection on the downside. So if you understand psychology, it is enough. When a candle is drawn like this, it is called an evening star or a shooting star. Tell me where this is created in the market. Does it draw on the upside? Since it is above the rejection, does it draw on the upside? Does it draw on the downside? Most of the times it draws on the upside. When the market trend goes up and a candle like this is drawn there, then we can understand that the market will reverse down again. Okay. So after that, look, I said that if there is a rejection below the evening star, shooting star, morning star, then the market trend is on the downside. Look here, look, I said that it is below the morning star. When the market trend is created, when the morning star comes, then the market goes up. This is the base. Can we take this as the base and take an entry? Pawin bro, I mean, don't take it. This is one of the confirmations, that's all. Okay, done. The next types of bullish candles are visible on the screen here, look. Otherwise, take a screenshot. If you want to earn money in trading, that is, if other people give calls or if other people tell you to take entries, you will lose 100%. This PDF is very useful for those who want to learn. Comment below that PDF, you will see a number on the screen. If you send a WhatsApp message to that number, I will send you this PDF on WhatsApp, okay? Come on, just comment below. Comment below that PDF, and I will send it after that, okay? Then look here, everything is candles, Marboji candles, bearish candles, bullish candles, right? All these are rejections, psychology starting, right? If you understand that psychology clearly, then the whole thing is understood. Marboji candles mean red and green falling at the same time. Evening stars mean they fall above, okay? So, if it falls above, there is a possibility that the market will come down. There is no such thing as bullish engulfing. Let's say the first red candle fell and its wick was also filled by the next candle, and the buyers on the opposite side dominated it and activated buying, which means the market will go up. Okay, so beer, single ping means that the green candle is like this. It dominated the green candle and included it in its body. So when it fell, the market is on the downside. That means we can recognize that the buyers here, those people, the majority of money, are showing interest in taking us down again. Okay, after that, the bear single ping here is that chart. See how what I said works out for you on the real chart. Look here, did the red candle fall? Did the red candle fill the entire green candle? After that, the market started going up. Okay, look here, did this green candle fully fill the red candle? When it was created, the market started going down. This is how the market is useful if it takes directions. Once you look at the names here, all the names are understandable, right? So, if you observe all these clearly, all these will also be useful for you. Okay? See, this is called the 3 white soldiers, it is called the 3 black crown, it is called the bullish 3 line, it is called the bearish 3 line strike, and then it is called the bearish bullish 3 line stick. So, in this way, they are different with different names. Look at this: bullish single finger hammer, morning star hammer, bearish single finger shooting star, evening star shooting star. They look different to us. So I think everyone has understood everything about candlesticks. So if you don't understand anything, comment below and everyone likes it. Thank you.